Good day, grade 12s. My name is Carden Madzokere. I'm the author and publisher of the Distinction Bound Student Textbooks. Now, welcome to lesson or video 1.1 on foreign exchange market. Now, as promised, I said I'm going to treat the graphs on foreign exchange while you guys prepare for the exam. Now, this one then obviously says study the graph below and answer the questions that follow. So let's have a look. So we have foreign exchange market. So this is a market for rands and dollars. So this shows how rands and dollars are trading on the foreign exchange market. Now, this is the initial demand curve. This is the supply curve, and they intersect at point E. So with that, 100 million US dollars are demanded and supplied on a daily basis, maybe. And with that, we have an exchange rate of $1 is equivalent to 14 Rand 60. Okay, now, the previous graph that we discussed, we saw a decrease in supply and an increase in supply, and we explored factors that could cause that to happen. And if I just take you back a bit, since this is a market for dollars and rands, what that means is that will be supply for foreign currency. Now, what can cause a decrease? What can cause an increase? A decrease is caused by less Americans coming to South Africa, less Americans buying South African goods, and so on. And then an increase will just mean the opposite, which is more of everything I said. Now, here we have demand. Now, this is demand for foreign currency. Now, who demands foreign currency? In this case, now it's us, people in South Africa. So we then go on the foreign exchange market, which is a market where one currency can be traded for another. And then once we go there, we say we want dollars. So now this is us demanding dollars. That's different from them supplying dollars on the foreign exchange market. Okay. Now, us demanding, what can cause an increase in demand for dollars? Well, if maybe we want to go to America, we want to invest in America, want to buy shares in America, buy property in America, or another thing that I keep leaving out, which is true, is speculation on the dollar. Okay, now you see this thing called Forex trading, when people have this belief when they watch news, and in the news somehow they have this belief that the dollar could go up in value based on whatever it is that will have been said in the news. So there's speculation on the dollar. So we might see an increase in demand for the dollar. Now that will cause the dollar to appreciate. Now what you see here then is something like that. So the dollar then appreciates from 14 to 15. But take note, the rand is depreciating. So the thing that's happening here is that the rand is depreciating against the dollar. And yes, it's going from 14 to 15. Now, many people would think this is the appreciation of the rand, which is wrong. And the confusion comes because they look at the numbers. Then they see, 15 rands is more than 14 rands, so the rand is appreciated. No, it means you need more rands to buy the same dollar. So the rand is weaker because you need more of it. Just as much as if bread is now 15 rand from 14 rand 60, it means the rand is weaker. The rand is losing its value, but the bread is gaining because it's no longer worth 14. Now it's worth 15. So the bread is gaining. So basically it's that. You shouldn't get it twisted. Then we demand more dollars than before. Initially, we demanded $100 million. Now we demand $120 million. So there's an increase in $20 million demanded on the foreign exchange market. So, yeah, we can talk about what could cause that. But let's go to questions now and see what is it that they could ask. So identify the original exchange rate. Now you must be careful. It says exchange rate. Many people would write E. But the exchange rate then is $1 is equal to 14 Rand 60 cents. So this is what you write, 14.60. Don't write E. Okay. Then number 2, name the exchange rate system used in South Africa. Now we're seeing this question for the second time. We saw it in the previous video. We said South Africa uses a free-floating exchange rate system. So it's what you see here. So South Africa uses demand and supply forces. This is what determines the value of our currency, the rand. We don't fix it to another currency. We don't fix it to a commodity. We simply use forces of demand and supply to do the job. Yes, the Reserve Bank from time to time does participate on an open market, which may influence the value of our currency, but it's kind of indirect. And yes, it's a form of management, but the type of management they use there is making use of demand and supply forces. So it's different from revaluing their currency or devaluing their currency, which is something that we'll talk about just now. Right. So name, okay, we did that. Then briefly describe the term devaluation. Now, what I normally say is take devaluation and revaluation, put them on the right side. Take appreciation and depreciation, put them on the other side. Now, the two, appreciation and depreciation, as things that happen naturally. And then these two, devaluation and revaluation, are deliberate acts by the central bank. Let me drink some water. Are deliberate acts by the central bank. So what I normally say in terms of examples, when we say appreciation and depreciation, it's like we're saying she died. And when we say devaluation and revaluation, it's like we're saying she was killed. What's the difference? She died. It's natural causes. She was killed. Someone deliberately did it. Okay. So when the value of a currency goes up, we say it has appreciated. But it has gone up due to what? Due to forces of demand and supply. So like what we see here, the rand depreciated, the dollar appreciated. What caused the change? It's demand and supply. So that's something else. Now, remove this demand, remove this supply. Talk about the central bank doing something deliberately. Well, then that is, what did the Reserve Bank do? If what they did is to increase the value of their currency, then they reevaluated their currency. If what they did is decrease intentionally the value of their currency, then what they did is devaluation. So how would you define this or describe it? You would say devaluation is a decrease, or let me rephrase. Devaluation is a deliberate act by the government, or if you want to be specific, you can say by a central bank, to decrease the value of their currency. So in South Africa, the institution that can devalue the rand is the South African Reserve Bank. So a deliberate act by the South African Reserve Bank to reduce the value of the rand is called devaluation. Now, if the rand goes down by itself without any intervention by the Reserve Bank, we then call that depreciation. If the value of the rand goes up without any influence by the Reserve Bank, we call that appreciation. And basically, it's simple. Then what is the benefit of a surplus on the current account? Okay. Of the balance of payment. So the balance of payment, as we all know, is a systematic record of a country's transaction with the rest of the world. Now, one of the accounts on that balance of payment is the current account. Now, the current account basically will have your merchandise imports, merchandise exports, net gold exports. It would have service receipts, service payments, income receipts, income payments. It will also have current transfers, which will be a net figure since it's things like donations and gifts, you name it. So it's a net figure, and so it being positive would mean we received more gifts than we gave out, basically. But anyway, let me come back to that. So the current account can either have a surplus or a deficit. Now, what is the benefit of us having a surplus on the current account? Basically, us having a surplus on the current account means we exported more than we imported. So basically, our currency was demanded more than we demanded other people's currencies. So basically, one of the benefits is it can cause our currency to become stronger in relation to other currencies. And it creates jobs in South Africa as more of our goods go out than the goods that come in. So it creates employment here in South Africa. And, the Reserve Bank doesn't have to worry about funding that deficit. So basically, it will increase our reserves. That's one of the things that will happen. We'll explore other answers if there's something I left out. Then with the reference of the graph above, explain the effect of the increase in the demand for US dollars on the value of the rand. Okay, so let's have let me see again. Explain the effect of the increase in demand. Oh, okay. Right, so this dollars increased. What effect does that have on the value of the rand? Well, we talked about it when we were studying this graph. In the beginning, we said an increase in the demand for foreign currency or dollars will cause the rand to depreciate. So the rand will lose its value from 14 to 15. 14 rand 60 to 15 rand. So basically, any 2 points that you can put there, I've been talking about this. So you definitely have something to say about it. Okay, so let's look at the first one. We said identify the institution. That's the South African Reserve Bank. Something is wrong here. Oh, okay. Now I know what's wrong. I did not move it to 11 because this is 11 years. Okay, so identify the original exchange rate in the graph above. That's $1 is equivalent to 14 rand. We said so. And then name. And remember, this is when I was telling you that you do not say E. You don't say E. Okay, I think you got it. Then name the exchange rate system used in South Africa. We said it's a free-floating exchange rate system. Briefly describe the term devaluation. I explained this. It's the one I was saying she was killed. So it is a decrease in the value. Okay, first, this part is important. Because if you don't talk about the fact that the value of a currency goes down, then I don't know what you want to talk about. So this has to be there in your definition. But another thing must also come, because a decrease in the value of a currency might be depreciation. But you want to specify and give us a definition that shows that you are talking about devaluation, not depreciation. So you want to talk about this point here, due to a deliberate action. So this is important by the government. Okay, so another way of saying it, deliberate government intervention. You see, this is important to reduce. So our decrease is there. Reduce the value of a currency. Or it is when government or central bank fixes or pegs the value of a currency in terms of another at a lower than before. Okay, what is the benefit of a surplus on the current account? I explained. Okay, the value of the rand will increase. I said it. Importing production inputs will be cheaper due to us having a stronger currency. Then production will be stimulated and more employment. I mentioned employment. Public debt to cover BOP problems. I said this, but I probably said it differently. But you see it says public debt to cover BOP problems. I said it as government does not have to fund the deficit. So basically it's a good thing because it actually increases reserves. Okay, yes, then they say it here, foreign reserves may increase. So it's a good thing altogether. Then the last one, with reference to the graph, yes, explain the effect of the increase in demand for US dollars on the value of the rand. Now, an increase in US dollars in demand for dollars shift the demand to the right, yes, from D to D1. Yeah, and then what? Market equilibrium will shift, yes, true, but you're not answering yet. The price of the dollar increased from 14 to 15, which means the South Africans will need more rands. Yes, so what does that mean? It means that the rand depreciates. So basically, since it's 4 marks, you have to say more than 1 point. But bottom line, the rand has depreciated. So whatever it is, however it is that you put it, bottom line, you must arrive to the point that the rand or the value of the rand is going to go down. Okay, I hope this is helpful, and please comment, like, share, subscribe, and I'll see you in the next video.